What's up, YouTube? We are back at it again with another jam-packed video full of information. And today I'm going to be talking about the small loss that I took here on AMD Calls this morning. I want to talk about the importance of your entry. Entry is the most important part of your positioning on a trade. The reason for that is because it's going to determine how much risk you put on the table. So without further ado, let's get started. This is a chart right here on AMD, and as you can see, I have my levels set up. Let me remove this level here. So the purple levels that you see here are support and resistance. These are the levels that we can see are continuing to react to the downside as rejections at 153 and react to the upside as a bounce here at the 150 level. So anywhere from 150 to 153, we are just trading in between that zone. So we are waiting for a break above those zones or a break below the zones. And in today's trade, we can see that we broke above that 153 level. So before the market opens, you got to mark your pre-market highs, which is here, and your pre-market lows, which is here. So we can see where the stock is trading during pre-market, right? So we're trading in that zone and we're waiting a break to the upside or a break to the downside. So when market opened, we got two huge 5-minute candles to the upside, showing that buyers were in control. Buyers came in and started launching AMD up. So I was really focused on this trade and waiting for a nice little pullback so we can continue this trend to the upside because of all the volume that was bringing in. As you can see here at the bottom, this is the volume that was showing. So we saw a lot of power coming in. And so I waited for a pullback, which here at this red candle, this is where I entered my position. I entered right at this wick right there. That wick was my entry. And so if I put my stop loss and take profit, this is my long position. I would put my stop loss a little bit before under 153, right? As soon as if it breaks 153, I'm closing position. And then my take profit, I was gonna go for a 1 to 2. So 1 to 2 would be right here, right? That's where I would take my first take profit at the new highs. So what happened is I entered my position and the 5-minute candle hadn't closed yet. It was just kind of going up and down, up and down. The bears and the bulls were battling it out. So what happened was we closed at a 5-minute doji. This doji here indicated me that the sellers were still in control and we can possibly go back to the downside. So even though I bought in this wick and we were in profit at the close of this 5-minute candle, I already knew it was bad news. So I had to be really, really smart with this and be quick to cut this trade close, right? So as you can see on the next candle that it opened up, we got a little wick. We got a little wick to the upside. I was hoping for a nice, huge rip to the upside because we were above that 153 and 153.50 zone. I knew that we were above this whole purple zone. So for me, I'm thinking we're bullish, all in, right? So we entered that position on that wick. The next candle opened up. We came up just a tad bit, and then we started to sink. As soon as we started to sink, I could see this formation starting to, well, the pattern starting to form out. This pattern here is called the evening star pattern. If you put these three candles together, this is the evening star pattern. That means we are turning bearish. The sellers are in control. And you can see just this red candle here was a bearish engulfing candle. So for me, I had to opt out right away because of that doji. When you see dojis like this at the top of a run, like it's going to reverse. You can automatically tell it's going to reverse. So I took my small loss. I didn't even let it go all the way to my stop loss. I was just like, nah, this is going down and I'm getting out. And sure enough, the trade continued to the downside. So I got my I started my positioning there, going for a 1 to 2, and I was going to put my stop loss under 153, which was there. I literally opted out as soon as it started hitting this red zone. So I was off like 5%, but I entered pretty heavily, so it resulted in a $300 loss. Nothing crazy. 5% of my position is nothing compared to the profit that we could have made. But check this out. I felt like my entry, because the strategy is the break and retest strategy from the pre-market highs or the pre-market lows. I felt like I entered way too early. The pre-market lows are all the way down here. So if the pre-market lows all the way down here, I should have been a little bit more patient on my entry, right? Because if I would have stayed in position on my entry here, my stop loss would have been all the way down here. You see how much risk is on the table now? Like it's a huge stop loss. You don't want that. You want your stop loss to be as small as possible. So my entry at this red candle here was super early. The trade actually played out the way I wanted it to, but I entered way too early. I had to wait for the pullback as closest to the pre-market high as possible. And so that's exactly what happened. Yes, we did get an evening star formation, which turned bearish with this huge red engulfing candle. But look, as you can see here, we tapped in literally to the pre-market highs. Like this is the pre-market high zone. We literally tapped into the pre-market highs and rejected, tapped in second time and rejected. So we bounced twice. That was an indication that we are bouncing off these pre-market high levels. I mean, it doesn't get clearer than that. All I had to do was be patient just a tad bit more for the pullback to actually happen and play out and get that retest of the pre-market high. So I'm glad I opted out pretty quickly, because that stop, I mean, I would have been losing a lot of bread if I would have just let it go all the way down to there. Like that would have been a huge loss for me. I would have kind of panicked and I would have sold for a loss, but I opted out and I took my loss, right? It was a one trade day for me when I could have trusted my levels, trusted the way I set things up, trusted my strategy, and I could have re-entered my position here at the reject of pre-market highs. I could have re-entered my position right there, have my stop loss under pre-market highs, and then target the opening range day highs, which is here. That would have been an easy 1 to 3 risk to reward ratio. Perfect setup, perfect entry, and perfect execution. But I decided not to trade anymore. I took my small loss and I just called it for the day. But I want to show you guys that the entry of your trade is super important, because the difference of your entry, the difference between those two is my entry was here. Look how big that red stop loss is compared to waiting for the retest of pre-market highs and then entering position there. Like, look how small that risk would have been if I would have just been a little bit more patient and waited for the retest of pre-market highs. But that wasn't the case today. I entered all the way up here, and if I would have put my stop loss under pre-market highs, that's a pretty big risk that I was actually putting on the table. So it was not worth holding. I stopped out right away and got out and took my small loss. But looking at the trade, looking at the strategy, it was a perfect setup. Retest, bounce off of pre-market highs, target back to opening range day highs, and take your profits. Now, you can always leave runners, right? Let's say I would have bought 5 contracts here. I could have sold 3 and left 2 runners. Pulled back a little bit, ran back up, pulled back a little bit, ran back up, and we just started to create new highs. As you can see here, we started to rip and we started to create new highs here. Let me get this squared right here. We started to create new highs, right? And then we created higher lows, right? Then we created new highs and we just continued going higher. Look at this run up, and then after market closed, look at this rip. Like AMD, we could have swung this trade for a massive gain. Like this is over 100% return on investment. And if we would have put our stop loss at that pre-market high, we could have ran this up all the way, at least for the market to close. This was a 1 to 7.28 risk to reward. And if this trade opens up all the way up here at 160, 161, this is a 1 to 12, almost 1 to 13 risk to reward. Like we're literally quadrupling our money. You know what I'm saying? But back again, our entry was the most important part of this trade, and that's where I made my mistake this morning on entering too soon and not waiting for the actual trade to play out and get my retest of the pre-market highs. So lesson for today is let your strategy set up, right? Let your strategy position itself to set up the way you want it. Have that patience. And if it doesn't present itself, don't chase the trade. You know what I'm saying? Like you don't always have to trade. And this is what I journaled this morning, that I don't have to chase the trade if it doesn't play out and position itself exactly how I want it. Last month, I had like the whole month, I only took 2 losses because I was being really picky with my entries, and my entries were on the dot, on the exact position that I wanted it, and I executed perfectly. Here, I got in a little early and it stopped me out right away. But if I would have just waited a little bit longer for it to play out and actually give me that pre-market high retest, that was my entry for a nice, perfect risk to reward position. So thank you guys for watching. I hope you guys learned something from this video and how important it is for your position, for your entry. And it's important to just enter when you need to enter on the perfect timing. Like it's not going to be a perfect entry all the time, but the smaller your risk, the better. Because again, this game is about having a small risk to a high reward. If we're trading big risk, small reward, we're not going to be profitable. And so that's why I stopped out super fast today. But I learned my lesson. I learned to have that patience, right? So now I just got to continue training that. It's something that it's an everyday, consistent training for your mindset, the psychology of your mind to be more patient. And so today's trade taught me that, and now I just got to be real mindful for the next trade that's to come. So I hope you guys learned something from this video. Please don't hesitate to like and subscribe. Like it really helps me out. I appreciate you guys for watching. I appreciate you guys for sharing my content, and I just want to continue putting that value. And thank you guys. I hope you guys have a great night, and let's get it, man. It's grandma, you know what it is.